It's a pleasure for me to introduce to you the results for Growthpoint Properties Limited for the period ending 30 June 2025. We see this as a bit of a turnaround year, with having guided the market for negative growth at the outset and at the half-year mark, turning that around to positive growth of between 1 and 3%. In the final analysis, we achieved 3.1% growth in distributable income per share, and applying an increased payout ratio to that, we've declared a final dividend which is 6.1% higher than for the prior year. This strong performance has mainly been driven by the South African portfolio, where across all three sectors, retail, office, industrial and logistics, we've seen improved property metrics across vacancies, rental renewals, and like-for-like net property income growth of just around 6%. In addition, we've seen interest rates reduce in South Africa, which has resulted in a significant interest saving, which contributed to the overall result as well. Standout performance from the V&A waterfront, with like-for-like net property income growth of over 12%, principally driven by the strong tourism growth within the waterfront and increased activity at the cruise terminal, as well as increasing revenues and profits from the operating businesses that we're investing in at the waterfront. Moving international, we saw Growthpoint Australia deliver a solid set of results, albeit that the dividend was a little bit lower after withholding tax. But that business is in good shape, with loan-to-value ratios having come down to below 40%, and we anticipate a turnaround in the office market across the entire spectrum in Australia, but in particular in the Melbourne market, which is still lagging. Globalworth had a solid year and has certainly repositioned itself, with gearing now at 38%. Unfortunately, the dividend was lower due to the high interest rates or high interest cost of refinancing the debt in the bond market last year, as well as a one-off tax charge in Poland, which has resulted in a lower dividend coming out of Globalworth. During the year, we also sold our stake in Capital & Regional, initially for a portion of cash, 1.2 billion in cash, and then a 14% stake in New River. And subsequent to year end, we've also sold the New River stake, realizing another 1.3 billion in cash. And all of these proceeds have been used to settle debt. Looking forward, we're pretty confident about the turnaround in the property sector. We do believe the property sector has bottomed out, not only in South Africa, but internationally. We're confident about our access to liquidity, the loan-to-value ratios, and we're projecting distributable income per share growth of 3 to 5%. And with a higher payout ratio of 87.5%, which will apply to the full year's distributions next year, we should end up with dividend per share growth of between 6 and 8%.